Mr. Subrat Kumar Sundare also will be welcoming the gathering soon.
Good
So
morning.
we'll get started. Most of the time you would have met. I think at least Vijay Kumar sir had come to our institute quite a number of times. So our director is on leave, so I had requested Mr. Subrat to do the honors. We'll get started in another 2 minutes, the moment 11:30 strikes. So thank you so much for joining both Mr. Shantakumar as well as Mr. Vijay Kumar and Mr. Subrat sir also. And a warm welcome to all the cohort of participants here as could join in this particular hybrid format panel discussion who are attending the faculty development program at SBIL. So warm welcome to you all. So a lot of, it is as part of our alumni connect that we do this, and people who had undergone some program or other from SBI or other banks to whom we are doing programs, all are getting a chance to join in this kind of programs. We do it in various themes, and it's only natural that when the budget has come, doing it in the theme of union budget analysis this time. So more of it, Mr. Subrat will be telling when he welcomes the gathering. So we'll wait for that. Let another 2-3 minutes go. Yes.
Thank you, Dr. Krishna Kumar. It's just 1 minute to go, means 11:30, so we can start the welcoming the participants.
Absolutely.
Good morning, Dr. Vijay Kumar. Good morning, Shanta Kumar sir.
Good morning.
And good morning to all who are connected physically, those who are connected over Teams. I can see a very large attendance over Teams, and we have the participants from the training program, faculty development program, around 30 present here physically, eager to listen to the panel discussion. I welcome all to this panel discussion. This is, we can call this a virtual panel discussion. We can also call it a hybrid panel discussion because although the speakers are connected virtually and a good number of attendees are connected virtually, there are also a good number of attendees physically present together and connected to the speakers virtually. And amongst them, we see Professor Dr. Krishna Kumar, who is going to moderate this. I just want to tell everyone, the fifth in the series of virtual or hybrid panel discussions in this academic year for SBIL. This is something we keep organizing from time to time with distinguished speakers and experts from different fields for the purpose of emanating knowledge, for the purpose of getting the benefit of the speakers, benefit of the deep knowledge of the speakers. And we never forget to include those who have been the alumni of this institute. Alumni means those who have attended a single program here are our alumnus. So we always give them the invite, and many of them actually join, which is a big encouragement to us and encourages us to keep organizing these programs. And Dr. Vijay Kumar and C.S. Shanta Kumar are well-known names in their respective fields. Dr. Vijay Kumar is a well-known investment expert. C.S. Shanta Kumar, Chartered Accountant Shanta Kumar is an expert in taxation matters, but more about them when they are formally introduced by Dr. Krishna Kumar. So this is the background for this gathering, this event. I won't take any further time. I would rather request Professor Dr. Krishna Kumar to take over, do the formal introduction of our distinguished speakers, and then start the proceedings because he is the main moderator of the program also. So it's over to you, Professor Dr. Krishna Kumar.
Thank you, Mr. Subrat, and all the panelists. As welcome, it's our pleasure to have you all here. As said by Mr. Subrat Kumar Sundare, this is the fifth time we are doing this, and so nice that we are able to do these in very frontier themes every year. And this has come at a very opportune time, and it's my pleasure to introduce the panel of experts who would be the expert panelists, in this particular format of Union Budget Analysis 2023. In fact, Dr. V.K. Vijay Kumar doesn't require much of an introduction. We have been connecting him in a lot of other formats as well. Incidentally, Dr. Vijay Kumar joined the Geojit Financial Services in 2010, prior to which he was working as a professor and head of Department of Economics in Sri Krishna College, Guruvayur, Kerala. And Vijay Kumar is currently the chief investment strategist with Geojit Financial Services. Vijay Kumar is a well-known and is as a very regular contributor of articles in economic and financial issues and a regular participant in discussions in various TV channels, both in vernacular as well as in English. He's very active in so many other forums like Money Control and all, articulating on the investment strategy and how the markets are placed. He's a very versatile personality, going to the economics, follows the economy on a day-to-day basis. That kind of passion. An academic, he has presented 76 papers in national seminars and 12 papers in international seminars. He writes columns in ET Online. His newspaper, his articles appear regularly in ET, Money Control, The Hindu, Express, besides Malayalam publications. He is a resource person for various universities like Kerala, Calicut, Kannur, MG, and so many other business schools. Dr. V.K. Vijay Kumar has made presentations on financial planning, investment planning, wealth management, India growth story, Indian capital market related topics in colleges, universities all over India. He frequently addresses investor conferences for new as well as savvy investors. He regularly addresses students and faculty in colleges, universities all over India on topics of economic interest. A warm welcome to you, Dr. V.K. Vijay Kumar. Our pleasure.
Thank you, Krishna Kumar. Thank you.
And now it's my pleasure to introduce to the audience. It is swelling ranks. Now we have already more than about 100 people. There is a cohort of participants of about who are attending the faculty development program virtually. Also, the attendees are swelling. It's my pleasure to now introduce Dr. Shanta Kumar, who is a practicing chartered accountant, having over 40 years of post-qualification experience. He is a fellow member of the Institute of Chartered Accountants of India, passing the exam, securing an All India rank at the age of 22. He is a certified information systems auditor. Furthermore, he holds an MBA majoring in finance, a degree in LLB, and also a PhD in taxation. He also has organization running an office as a practicing chartered both in India and I think overseas also. Started his career in Kerala, in this Kerala State Industrial Development Corporation, moving over to and then moved over to multinational Hindustan Lever, and later it's only later that he set up his own practice 33 years ago. Mr. Shantakumar holds a doctorate in taxation and is a strong authority on multiple VAT as well as GST related topics in India. His large client base includes those in Fortune 500 list of companies. He represents his clients before GST and VAT and income tax authorities and appellate tribunals. He is a consultant based in Kerala and travels both within and outside the country for tax and advisory related matters. He has presented in various forums several papers on VAT, GST, finance, IT, audit, company law, and management topics, and published several articles on these subjects. Dr. Shantakumar is a visiting faculty to several business schools and professional institutions in India and Kingdom of Saudi Arabia, UAE, etc. He is in the panel of consultants of IDBI, IFCA, MSME Institute, etc., and is an executive member of the American Chamber of Commerce. He was a member of the expert committee of Guruvayur Devasam Board as well. Dr. Shantakumar is the past president of Thrissur Management Association, is a chairman of a Manappuram Group company by name Maban Nidhi Limited, is a director in Manappuram Jewellers Limited and several other companies. He is married to Dr. Satish Santakumar, a pediatrician, and is blessed with 2 children. So a warm welcome to you, Dr. Shantakumar. So on behalf of the entire group cohort of participants here, it's my privilege to moderate this particular panel discussion. And now we'll get started. The format of the panel discussion will be this. We will have kind of questions being posed to both the panel. in a broadly round robin way. It's not that it should typically follow that. We'll have a moderated discussion for about an hour, and then we'll open it for Q&A in the last half an hour or so. Okay, so that's how the discussion will proceed. So let me first take the privilege of asking this question to Dr. V.K. Vijay Kumar. Sir, over to you. We all know that this budget has come in the backdrop of a global recessionary trend in the economy and a continued political uncertainty. And we also know that when Finance Minister presented it, it is being dubbed as the first in the Amrit Kal, and it is supposed to usher in a longer growth path to India when it wants to aim to become a developed nation. We also notice measures on fiscal consolidation or the correction of a lot of anomalies and rationalizations seen in the direct and indirect taxes, and the various proposals which has given the feel-good factor to the economy, and to perhaps all the stakeholders. How do you view this particular effort of the finance minister from the structural standpoint? In terms of growth considerations or capital investments, or in the broad meaty part of the substance in the proposals. How do you see it, sir?
Good morning, Dr. Subrata Roy, Dr. Krishna Kumar, Dr. Shanta Kumar, and all the participants. A warm good morning to you. I am very glad, indeed delighted to participate in this panel discussion on the budget. I've been participating in the panel discussion for the past, I think, 4 years, and addressing members of the participants in SBI Institute of Leadership is a very pleasant experience for me. I look forward to that. Even last year, I had been there for participating in a couple of discussions and also a couple of lectures. So the SBI Institute of Leadership is an institution close to my heart, and participating in any program being organized by the SBI Institute of Leadership is indeed a great pleasure. Now, coming to the answer to the question that you have raised, yes, we are in an economic slowdown. There is a global economic slowdown. That is an area of a very serious concern. We don't know whether this global slowdown will further degenerate into a global recession. That is one area of uncertainty. Nobody has a clear idea. Even the Fed has openly said that we don't know whether we will succeed in soft landing the economy, or the economy will get into a recession in the next couple of quarters. That is an area of uncertainty. The reason why the uncertainty is very high in this modern world is we are in an age of polycrisis. Formerly, crisis used to come, let us say, once in 10 years, once in 20 years. But now we are in an age of what is now referred to as polycrisis. Many crises happening together. And when many crises happen together, well, the sum of parts, the actual impact is more than the sum of parts. Like the last 3 years, we had 2020 and 2021 global economy hugely impacted by the COVID-19 lockdown and the consequent recession, the massive recession of 2020. Even in 2021, even though the global economy recovered, the Indian economy also recovered, we were recovering from the negative growth of 2020. So 2 years were almost lost in 2020 and 2021 because of the COVID impact. Then before we could initiate the recovery, we had this Russian aggression in Ukraine, and the Ukraine war crisis came close on the heels of the first crisis, and that led to a sharp increase in the price of commodities. The crude went up to 139. Fortunately, it came down after that. Natural gas and all fuels, the prices rose. Food articles, since Ukraine is the breadbasket of Europe, the food prices were impacted, sunflower oil, all these were hugely impacted, and inflation became a global phenomenon. And then when inflation became a global phenomenon, Actually, the central banks of US, Japan, Europe, and UK were trying to increase inflation, and they were consistently failing in that. But then suddenly in 2022, inflation became a global problem, and the Fed particularly started raising interest rates in a manner which we have never seen before. Fed raised interest rates 7 times last year, excluding the rate hike we had. Yes, excluding the rate hike that we had 2 days back, they raised interest rates 4 times by 75 basis points, twice by 50 basis points, and once by 25 basis points. And this has been followed by the last rate hike of 25 basis points the day before yesterday. So this rate hike by the Fed led to capital flows from the rest of the world, including from other developed countries and emerging markets to US, and consequently, dollar appreciated and other emerging market currencies and developed market currencies, including euro and Japanese yen, corrected. So countries like India started experiencing what is called imported inflation. Actually, INR was a better performing currency in 2022, but even then currency depreciated by 11%. So we had this capital outflows, foreign portfolio investors pulling out money, rupee depreciating, imported inflation. So all these three crises happened in 3 years. And that's why I said this is the age of poly crisis, and the impact is more than the sum of parts. And what is the scenario now? The IMF has projected 2023, this year, calendar year 2023 growth rate at 2.9%. That is an optimistic projection, assuming that the US will not slip into a recession. The growth rate for US is 1.4%. For Eurozone, only 0.7%, 0.7%. China is recovering from their zero COVID tolerance policy and all that. So their growth rate is going to improve. That is the silver lining, to around 5.2%. India is the best performing economy among the large economies of the world. Our growth rate this financial year, FY23, is likely to be 7%. We have done well. But then India, with a 3.2 or $3.3 trillion economy, even though we are doing well, we are not big enough to move the needle as far as the global growth is concerned, because global growth is driven by these three engines. US, a $22 trillion economy, Eurozone, an $18 trillion economy, China also an $18 trillion economy. So even though India is growing, ours is only a 3.2, 3.3. A finance minister said that in March we will be a 3.4 or $3.5 trillion economy. But even then, we are not big enough to move the needle as far as the global growth is concerned. So if there is the point that I am trying to make is, if there is a big global slowdown in 2023, even if we succeed in avoiding a global recession, that global slowdown will impact India's growth also. That is why the projection for India growth for calendar year 2023 by the IMF is 6.1%. And the optimistic projection by the Government of India and the Economic Survey is 6.5% average. It is expected to range between 6.2 and 6.8% for financial year 24. So the only way we can achieve this 6.5% average growth is by increasing capex in a big way. Because a very important point that has to be understood is that private investment is not happening in a big way. Actually, private investment should have taken off, because normally when the capacity utilization in manufacturing reaches 75%, the 75% is the trigger point at which private capex kicks in. Private capex is happening in some segments like steel and cement, it is happening, but it's not happening the way it used to happen formerly, when capacity utilization in manufacturing reaches 75%. The reason is, we have to understand, the reason is, when there is a war raging in Europe, well, you can't say, and particularly on one side of the war is Russia, which is the second largest military power in the world. So you can't say what will happen. I heard one CEO answering this question as to why he is investing. He said, yes, it is time to invest. Demand is picking up, particularly in our industry. But this war background is not the right kind of an economic environment where you can invest big amount of money. So that is one of the reasons why the private capex is not happening as it should, even though capacity utilization in manufacturing is 75%. So what should the government do? The government should step up public expenditure, investment expenditure, and this is precisely what the government of India has done to the last year's budget and this year's budget also. Last year, the capital investment target was 7.5 lakh crores. What is likely to be achieved is 7.3 lakh crores, according to the revised estimates. Therefore, the next year target is 10 lakh crores, which will be a 33% growth on the budget estimates of last year and a 37% growth on the revised budget estimates. So 10 lakh crores is a very ambitious expenditure. This is precisely what the government should be doing. And let us hope with this kind of public expenditure, the economy really starts growing. And also, another very important positive macro setting for India is the corporate sector is not leveraged. It was highly leveraged. It has deleveraged during this crisis. They are ready to invest, ready to borrow, and India's banking system is in the pink of health. In spite of the Adani crisis, I am not going to that right now. Perhaps there will be questions on that later on. So public expenditure, and that has got the potential, and also it can crowd in private investment also. It has the potential to achieve a 6.2 percentage growth. I am not as optimistic as the government. I don't think 6.5% is achievable, particularly in this context of a global growth slowdown. But 6.2 percentage growth for FY24 is very much in the realm of possibility.
Thank you. Thank you so much for taking us through the globality part of it and how we are placed structurally in the scheme of things. Now, let me also take this next question to Mr. Shantakumar. We all knew that when Finance Minister announced the budget, she also made a pun of a remark saying that I'm coming to the point what each of you are waiting for when she talked about the personal income tax element. And there was also enough and more memes in the market, in all our social media apps, that, as far as the common man is concerned, he is more bothered about how the slabs are getting tinkered in the, personal taxation part of it. Coming to the personal income tax part of it, raising the exemption limit or rationalizing slabs to 5, correcting anomalies in surcharge, enticing and moving taxpayers from the old exemption-heavy income tax system to the relatively new exemption-free income tax regime. Are these proposals really bound to benefit many of the cross section of people, and will it put more money in the hands of the people? How do you see it, sir, as a practicing chartered accountant? Over to you, sir.
Yeah, thank you, Mr. Krishnakumar and Mr. Subro Roy and Dr. Vijay Kumar. When Vijay Kumar said that this is the fourth time he has been with the SBI on the budget, I am on the second, and both of us are bet by Mrs. Nirmala Sitharaman. She is presenting her fifth budget the consecutive time, by continuous time. So coming back to your question, whether the new scheme will be attractive or not. Before going into that, I would say that the government is trying to discourage the old scheme and luring people to join the new scheme so that the exemption regime is going to be ended. Maybe because this is the full budget before the elections, the government has withdrawn the old scheme. Maybe after the next budget or after the election, the government might even go to withdraw the old scheme altogether. Then coming to the changes that are being brought about, in the new regime only the exemption limit has been raised from 5 lakhs to 7 lakhs. Currently those paying taxes, there's a rebate up to 5 lakhs that has been raised to 7.5 lakhs. And in addition, 50,000 rupees standard deduction has been introduced At 7 lakhs, it is 52,500. So with that, if you have an income up to 7.5 lakhs, there will not be any tax liability. Then comparatively, and so there is a new slab has been changed. The old new slab, new scheme, old new scheme, or the new scheme old has been rejigged. And now up to 3 lakhs, there is no tax. And from 3.6 lakhs, 3 to 6 lakhs, it is 5%. And 6 to 9 lakhs, it is 10%. And from 9 to 12 lakhs is 15%. And 12 to 15 lakhs is 20%. And above 30 lakhs, it's 30%. Above 15 lakhs, it is 30%. So the government has tried to reduce, and according to the words of Nirmala Sitharaman, if you look at a new scheme, for an annual income of 9 lakhs, a person will be saving 45,000 rupees, which is just 5% of his his or her total income. It marks a 25% reduction over 60,000 that needs to be paid under the existing structure. Similarly, any individual with an income of 15 lakhs would require to pay 1.5 lakhs, required to pay only 1.5 lakhs or 10% of his income, a reduction of 20% from the existing 1,87,500. Now, look, comparing the old system with the new system, which is beneficial. The new scheme should become clear choice of those earning an income up to 7.5 lakhs with a 50,000 reduction, as I told you. Unlike the new tax regime, under the old structure have not been changed under the budget. That is, income up to 2.5 lakhs exemption is there is only up to 2.5 lakhs, 5% from 2.5 lakhs to 5 lakhs, and 20% up to 10 lakhs, and 30% above 10 lakhs. That doesn't change. And under the old scheme, you can still have several deductions like ATC, ATD, not to mention those are eligible for the standard deduction of 50,000. And there are other deductions like health insurance, NPS scheme. And so up to 5 lakh rupees if you earn, plus 5 lakhs basic exemption, up to 10 lakhs, you can say you can get exempted. Because if you have savings up to 5 lakhs, your income comes to 5 lakhs, and there is a rebate on 5 lakhs under 87A. So you won't be paying any tax for an income up to that stage. Whereas if you compare with the old scheme, the new scheme up to 9 lakhs, you have to pay 45,000 tax. Individuals with an annual income slightly above 10 lakhs will also have a lower tax outgo under the old regime, as they can claim all the deductions to bring their income drastically. On the other hand, those with an annual income of 10 lakhs will have to pay at least a flat rate under the new regime after standard deduction in the absence of deduction. So is it the old regime or the new regime which is better?
Okay.
The individuals who do not have any housing or any other benefits, for them, it is better to go for the new regime. And people who have such housing loans and other, it is better to go for the old regime. And I would also say that people in the highest slab, say people who are earning more than 5 crore, with a reduction of the effective reduction from 42.74% to 39% under the new regime of the surcharge, they will be paying less by 20.22 lakhs crore for an income of 5.5 crores. So this is in short the benefits you are getting, comparative analysis of the old and the new schemes. Thank you.
Thank you. Thank you, Mr. Chandrakumar. Just an add-on question to it. Now, when the new scheme has been peppered with more of, enticements, how do you see, would it have been better if the at least the Section 80D benefit of, Mediclaim related, this one could have been included into the new scheme?
I mean, there are a lot of wish lists which were there, but unfortunately, they have not been considered by the government, because what the government is trying to do is bring down the overall tax, taking away all exemptions. We have seen in the case of industries also, that if the industries do not take any benefits, their tax rate has been reduced to 22%. With surcharge, effectively it is less than 25%, 24.75%. So that is a trend to which the government is going.
Okay. Thank you for clarifying that, sir. And coming back to Vijay Kumar, sir, Sir, we also know when we go to the assumptions in the budget. I'm trying to put some more sense on the math of the budget. When we say that the nominal GDP growth rate of 10.5% as a model assumption, or a tax buoyancy of 11.7% when it comes to net tax revenues, or the disinvestment receipts being budgeted at 57,000 crores, which is much the same figure as last year, corporate and income tax collection to grow at about 10.5%, dividend from the banking sector, which is right now at about 41,000 crores in 2020 to 23, is projected to grow at about it'll end up as 48,000 crores with assumption. Dividends from public enterprises is also budgeted at about 43,000 crores. This is as far as the revenue side is concerned. Coming to the expenditure side, the math talks about the mathematical assumption is rise in capital expenditure to be over 10 trillion, or a 37% increase. Cut in subsidies from 5 crore 21 lakh 585 crores to 3 lakh 74,707 crores. Cut in Manrega to 60,000 crores. Fiscal deficit target being set at 5.9% and still sticking to the glide path to achieve 4.5 by financial year 24-25. Are these numbers conservative enough and gives credence to the whole budget, sir? What is your take on that, Dr. Vijay Kumar?
Yes, the figures are conservative enough. You have to be ultra conservative in this age of uncertainty, because unknown events can happen, and put all your budget estimates in a complete quandary, because that was what happened last year.
Okay.
The subsidy bill last year got exaggerated. It went for a 6 because gas prices went up, and fertilizer subsidy went up by more than 1 lakh crores just because of that. That was not factored in the budget, because when Nirmala Sitharaman presented the budget, Vladimir Putin was a personification of peace. The war has not broken, right? So many unknown things can happen. Therefore, one has to be conservative. And regarding the GDP growth rate, the government, even though the government has projected a 6.5% GDP growth rate, 6.2 to 6.8 and average 6.5. If you look at the nominal GDP projection, it is only 10.5. Actually, if you achieve 6.5% real GDP growth, 6.5% plus 4.5 inflation will give you a nominal GDP growth figure of 11%. So the government has not taken that. So they are erring on the side of caution, and that is a good strategy. The Infosys technologies used to be appreciated for under promising and over delivering. So under promising is always a good strategy. That is what the government did last year also. The revenue actuals were much better than the projections, and that always have a feel good factor. You refer to the feel good factor in your introduction,
Yeah.
But then if you completely miss on your estimates, the feel good factor will turn out to be a very nightmarish factor. So that way, these figures are particularly on the revenue expectation side, achievable. I don't know about the disinvestment targets. The disinvestment, the government has been consistently underperforming. And this year also, one
same figures they have been quoting.
Yes. The disappointment is that the government has not used the word privatization. Maybe the last budget before election is not the right budget to talk about privatization. In a country where privatization is still a very bad word, perhaps that is the reason why they avoided using the word privatization. Well, regarding the reduction in subsidies, if the natural gas prices remain where they are now, you must have observed this. Natural gas prices have declined by 40% this month, in January, not this month, last month, in January. Because the winter in Europe was warmer than expected. And therefore, the consumption has declined. So the better than expected or warmer winter in Europe has actually brought down the price of natural gas. Therefore, fertilizer prices also will come down if assuming that the war will not aggravate. So that is a big unknown factor. Then regarding the other Manrega, so actually the allocation is not very significant because it is a demand-driven allocation. If a state wants that, the money is given. Now, money is not a constraint. So demand driven. It's open-ended, demand driven. Money had never been a constraint. Of course, then states will have to submit all the data regarding that, about the expenditure actually incurred, the number of man hours and all that. If that is fulfilled, money is not a constraint at all. But I think the cut in allocation for Manrega for financial year 24 in the budget is realistic, because there is a movement of people from the rural areas back to urban areas now that COVID is behind us. We had this massive migration from urban to rural areas, people moving from urban construction sites back to their villages when COVID broke out. And therefore, the demand for Manrega work increased. Now that situation has completely changed. And also, as bankers, you all know that bank credit growth is impressive at 17%. That's a year-to-year bank credit growth now. And there is a construction boom also happening in many parts. So there are lots of employment opportunities for labor, which is actually nudging labor back from the rural area to urban areas. Therefore, the finance minister, I think, is realistic in her assessment of a lower allocation for Manrega. Now, one point which I would like to add here, Dr. Krishna Kumar, is the fiscal deficit part. You refer to that 5.9% fiscal deficit target for next year. Last year's financial year 23 fiscal deficit target of 6.4% has been achieved, even though the actual fiscal deficit absolute number is much higher, but yes, but the denominator, nominal GDP, helped in containing the fiscal deficit at 6.4%. But then one point that we have to understand, particularly in this age of uncertainty, is that countries, emerging economies with vulnerable fiscal deficit and current account deficit can suddenly slip into problems. Look at what is happening in our neighbors now. Sri Lanka, we all know, became almost a basket case overnight. Pakistan has 27% inflation, and the currency has crashed. Crash would be a very mild word to describe what happened to the Pakistani currency. There is food crisis, and they have approached the IMF. All the three countries, Sri Lanka, Pakistan, and even Bangladesh. Bangladesh, we know, is doing well. We had this Bangladesh banker delegation in your institute, for which I also came for the training. So everyone has been very gung-ho about Bangladesh. The growth has been impressive, but then they slipped on the current account and the foreign exchange reserves disappeared, and even strong Bangladesh is now knocking on the doors of the IMF. India is not, because we have $560 billion of foreign exchange. My point is, for a country like India, let us say for countries with the same credit rating as India, India has the highest debt to GDP ratio and a very high fiscal deficit. So if this fiscal deficit at 5.9% of the GDP and our current account deficit running at 3.3% this financial year, we are not in a dangerous situation now, but I refer to this poly crisis. Suppose we have another crisis, let us say the war getting aggravated, because we are going to the annual day of the war. I don't know, annual day of the war is something to be referred to, but then there are rumors that Mr. Putin might turn aggressive. If that happens, and again, imagine a situation, God forbid, but imagine a situation where crude again goes back to 139 at the height of the Ukraine crisis. If crude goes to 139 and remain at 139 for 6 months, India is vulnerable. Even India is vulnerable. There can be sharp depreciation in the currency. There will be capital flight, because one thing will feed on the other. There will be capital flight, which further leads to depreciation in currency and imported inflation, and RBI will be in a tight spot. Otherwise, RBI can pause after perhaps one more rate hike. We don't know. But then this is one situation. That is why I say we have to take fiscal consolidation very seriously. So the government has laid down a clear roadmap for that. There's a glide path. As you rightly said, 5.9% for FY24, and less than 4.5% by FY 25-26, if I remember correctly. That is a good glide path, but then we should achieve that. So fiscal consolidation, containing the current account deficit, these two things are very hugely important. I don't have much quarrel with the numbers, as I have already explained.
Okay, okay. Thank you. Thank you for clarifying each of these aspects. Coming back to Dr. Shanta Kumar, sir, just want to know, sir, I guess you're there? Yeah.
Yeah,
Yeah. Sir, regarding the major proposal, we have discussed the personal taxation part of it. Could you highlight for the benefit of the audience what were the major proposals as far as the direct taxes that merit attention, other than the personal income tax element?
Yeah, Mrs. Sitharaman, when she presented the budget, she didn't talk much of any for amendments in the Income Tax Act except a few. But actually, if you look through the finance bill, there are 100-odd amendments which have been brought to various sections.
Yeah.
Yeah.
Lot of nuts and bolts issues have been answered, isn't it?
Exactly,
The
exactly.
speech was very short.
Yeah.
It was very short. This time, last year, it was about two hours. This time, it was less than about 1 hour, 20 minutes or so. And on the major things, she has not spoken because it's all hidden inside. And so I would touch upon a few of them. For example,
Yes.
the first one is regarding that about the rates and the slabs. I have already spoken. Then payment to MSMEs is one area because the government wanted to give a boost to MSME to improve their finances.
True.
So what the government has done is, as per the MSME Act, every company has to pay MSME their dues within 15 days from the date of the submission of the bills.
True.
So this has not been happening. Even though in the balance sheet, the companies have to mention that the dues to the MSMEs have been cleared. So they would have cleared when the balance sheet is signed, but not paid within 15 days. Now in Section 43B of the Income Tax Act, they have introduced a provision by which if the payment is not made to the MSMEs, you will not get a deduction. So that will be on payment basis only. But under 43B for other items like bonus, employee salary, etc., that time is up to the filing of the return. But here they have made an exception saying that that will not apply. You have to go as per the MSME Act, where the payment has to be made within 15 days. So if you don't pay within 15 days, and if you pay subsequently, you will not get any reduction, even if it is paid. This is the same case with employees' contribution to the Provident Fund.
Okay.
In employees' contribution to the Provident Fund and ESI, earlier the employer was utilizing that fund as a working capital, and they were paying it only at the time of payment of the filing of the return. Subsequently, this matter came up before the Supreme Court, and Supreme Court clarified that unless the payment to the employees is paid within the due date as prescribed under the ESI Act and the PF Act, that is within 15 days from the date of the end of the month, you will not get deduction. Similar thing has been brought about as far as the MSME payments are concerned. The next important thing is payment of cash payment. Cash payment as far as the cooperative societies are concerned. To deduct TDS at 2% if cash payment exceeds 1 crore. That is the thing now. It has been amended and increased from 2 crore to 3 crores now. Same way, if non-filer, if a person has not filed the return of income, or if he has nothing, then in his case, the payment is more than 20 lakhs, 2% tax was cut. And if it is more than 5 crore, 1 crore, 5% was cut. Now this limits has been increased from 20 lakhs to 1 crore.
Okay.
Then primary cooperative societies, they were accepting loans and giving deposits in cash. So there are two provisions in the Income Tax Act, 269T and 269SS, where it says that you cannot accept any loan or deposit or repay any loan beyond 20,000 rupees in cash. So for the benefit of these primary cooperative societies, the limit of 20,000 has been raised to 2 lakhs from 1/4/23. that is from this running year, from 23-24. Normally the amendments come for the assessment year 24-25, but this is introduced from 23-24 itself. That is assessment year 23-24. Then ease of compliance, there are certain things being done. Claiming deduction on amortization, that is under 35D. The companies and marketing there, they were not able to, they are charging the expenditure as just to furnish a statement. Earlier that has been passed by the board of the board. Yeah. If they are preparing a project report or a market survey report, it has to be passed by the board. Now they don't have to do that. They can just file the particulars with the income tax officer in the prescribed form. That is all. I don't know whether it will be matters will be complicated or simpler, because board we can explain and make them understand. Yeah, we are spending so much money for this. But when it goes to income tax officer, then I don't know how will be the outlook, especially when we have gone into a faceless assessment regime, where a person sitting in Bombay will be assessed by sitting in Guwahati or any other part of the country. The next is increasing the threshold limit for presumptive tax. There is a presumptive tax by his small and medium enterprises. They can up to 2 crores. They need not maintain any books of accounts. And if their cash dealings is less than 5%, they can declare 6% as a profit. No questions will be asked. Okay. And if the cash payment is more than 5%, then the income declared to be 8%. So this limit was 2 crore. Okay. If it is beyond 2 crores, you have to go by the regular route of maintaining the books of accounts, getting it audited and all that. Now this 2 crore limit has been increased to 3 crores. Same way in the case of professionals, it was up to 50 lakhs. If your income is gross receipt is below 50 lakhs or up to 50 lakhs, you can show 50% as your income and you need not maintain any books of accounts. That has been now increased to 75 lakhs with a rider. Earlier it said that if your income or expenditure is in cash is 5% was not there. Now they have introduced. If your income or expenditure is in cash, says for example, in the case of doctors, most of the fee they receive will be in cash only. Absolutely. So they will have to still continue with that 50 lakh limit. If they have to go to 75 lakh limit, then they have to restrict their cash transactions, both receipt and payment, up to 5%. The next is extending the scope of TDS on income from unit holders who are NRIs. 5% is to be deducted. So they didn't have any provision for getting a lower rate of deduction. Suppose if they don't have any other income, if it is an NRI, 5% will be automatically deducted. Now the government said that you can apply to the income tax officer under 197. You can give an application form where you got to mention that what is your total income, and if it is falling at a lower tax, you can ask for a lower deduction. And if you don't have any income, up to 5 lakhs or 7 lakhs, depending upon the old or new regime, is going to get assessed. He can say that no tax need be deducted. The officer will issue a no tax deduction certificate, based on which the NRI can escape the rigors of TDS and filing the return and all that. The next is regarding the widening and deepening of tax base. Their removal of TDS. No TDS for interest payable on any security issued by a company where the security is dematerialized and listed in a recognized stock exchange. That was the position. There was no TDS. Now the government found there is lot of leakage of income, and so TDS is introduced from 1/4/2023. That is 23-24 assessment year. Then TCS is tax collected at source. We have TCS on alcohol, liquor, forest produce, scraps, and other items. And TCS has been introduced now on foreign remittance through liberalized schemes. That you might be it might be of interest to the bankers. It says overseas packages. Suppose if you are traveling abroad, the rate of tax was 5% TDS was deducted. Now it has been increased to 20% without any threshold limit. 5% has been increased to 20%. And in other cases, it was 5% when the payment exceeded 7 lakhs. But now without any threshold limit, it has again been brought to 20%. The next is regarding the limiting the rollover of benefits under 54 and 54F. 54 is if a person sells a house property, if he invests in another house property, then whatever is the investment in a house property, it will be total capital gain will be exempted, right? In the case of 54F, unlike 54, it's not a capital gain that is to be, sorry, that is going to be invested. You have to invest the net sales consideration. So whatever is the net sale consideration, you have to invest in a house property, nothing else. But there was no limit. So the government found that the HNIs, people who are very rich, they used to invest, sell agricultural or any other land in cities and others, and they used to invest heavily in residential apartments. So government has now put a cap saying that if your capital gain investment in a new house is more than 10 crore, you have to pay tax. Up to 10 crore, you need not pay. Because we have seen people investing, buying properties up to 85 crore, 90 crores in cities like Bombay, Delhi, etc. So they will have to pay tax now, anything over 10 crores. The next is regarding undervaluation of inventory. The inventory used to be undervalued by most of the people to escape from taxation. You reduce your value, undervalue your inventory. Inventory, when you undervalue the inventory is coming on the right side of your profit loss account. So consequently, your gross profit will be reflected less. So by consistently undervaluing the inventory, you can keep on deferring your tax payment. Now, government has said that if the income tax officer feels like, they can refer valuation of the inventory to a cost accountant. And the cost accountant certificate has to be obtained, and then only the value will be accepted by the income tax department. So the appointment of the cost accountant will be done by the government, and the payment to the cost accountant will be done from the Consolidated Fund of India, so that he will retain his independence, right? So it is better now that the company itself engages a cost accountant and gets it certified, so that one cost accountant's valuation will be against other cost accountant. You can go for a fight with the government or with the department. And even for the bankers also, getting it valuation like that will put you in a better state. Then rationalization of exempt income from life insurance. That is section 1010D. So 1010D, that policy, any amount paid, there is only one condition, that the sum of the insurance premium paid in a year should not exceed 10% of the sum assured. That is only condition. So any income received under section 1010D will be exempted. Now the government said that now it will be restricted to 5 lakh rupees premium. If the premium paid against a policy is more than 5 lakhs, then the consideration you receive at the end of the term will be taxable. Here I don't know whether the government means a single policy, because that is from the budget and the finance bill, it is not clear. So if a person wants to take a pay premium of 10 lakhs rupees, he can have two policies paying 5 lakhs in each policy. And number two, what is government going to tax? The government is going to tax the money you receive in excess. What about the time value of money there? You are actually taxing the inflated amount. Inflation has not been taken into account because there is no indexation provision. In capital gain, normally there is an indexation provision. Your cost of acquisition will be indexed. And only on the index difference between the indexed value and the final value, it will be subjected to tax. But here there is no indexation provision. Maybe when the budget is discussed in the parliament, this could be taken up and this anomaly could be corrected. Then double deduction on interest on borrowed capital. So if you borrow capital for repair, renovation, or reconstruction of a building, you claim the interest under section 24. And some people claim it even under chapter 6A. Suppose if the loan and interest is being repaid, the principal amount will be taken. If you under 80C, you can claim under 80C also, the principal amount repayment. Then in some parts of the country, when they are calculating this cost of acquisition when the property is sold, the cost of acquisition they will be calculating, taking the interest cost also as part of cost of acquisition. Suppose if you are constructing it, you are borrowing a loan. Normally the asset is created, asset should be the cost of acquisition, should be the cost of the asset if you are purchasing a property, or if you are constructing a property, what you have constructed should be the cost. But there are some ingenious people who take also the cost of interest is also added to the cost of your asset. So while calculating the capital gain, the sale price and the cost of acquisition is the capital gain on which you be taxed. So there has been double deductions have been made by some people, and there has been no strict provision of how to calculate the cost of acquisition. Now the government has now amended Section 48 to say that you cannot take twice two deductions. Only once you can take under Section 24 or Section Chapter 6A, and you cannot again add it on to your cost of acquisition. Then penalty for non-deduction of taxes, there is another provision under one new sections have been introduced last year, 194R and 194R on perquisites in respect of business and profession, and 194S on transfer of virtual assets. So on these now, there were no penalties imposed if there is no deduction of tax. So 271(1)(c) has been amended to bring in penalty aspect to it, and the prosecution under 276(b) has been introduced for violating the law, and then you can be prosecuted. So that has been introduced. Then coming to TDS on accumulated balance in the EPF. So if you withdraw cash from the EPF, then if you don't have any PAN card, then you will be taxed at the maximum marginal rate. Whereas PAN with TDS with 20% is if you have a PAN, if you don't produce the PAN, it is only 20%. Okay. So small people who don't have any, who fall below the taxable limit, they are put into a lot of difficulties. So the maximum marginal rate, 30%, has now been reduced to 20%. Then bringing non-residents within the ambit of 56(2)(7)(b). That is, if you receive any amount while issuing shares at a premium, then the government will 56(2)(7)(b), the government or the tax authorities will compare what is the market price and whether the premium demanded is more than what is the market rate. So on the excess money received by the company will be brought to tax. But this section was confined to only residents. Now the government said that a lot of money was also being received from NRIs through the subscription to these shares. And now NRIs will also be brought to tax and scrutiny, and the section has been amended accordingly. Then valuation of residential accommodation under section perquisites. Suppose if the company is giving a residential accommodation free of rent, then the rule 3 will apply. If you are giving it a concessional rate, 17(2) will apply. So government wants to rationalize it and say that for rent-free accommodation, valuation will be, everything will be brought under a new rule which will be announced shortly. So these are the major amendments which will be attracted. I told you there are 100 amendments. I just touched upon about 18 or 19.
Okay. Yeah. Right. Thank you, sir. Thank you so much for clarifying the nuances in each of those direct tax provisions and the amendments. I'm sure many of those who logged in, both virtually as well as physically, would have benefited, especially being bankers themselves. Coming back to Vijay Kumar sir, regarding the, as we all know that the budget continues to have a big infra push, and the capital investment outlays have been bulked up to about 33%, especially with huge emphasis on transportation. We see that. How do you view this, sir? Does it create the sustainable efficiencies if we stay the course for the, say, next 10 years or so with the same infrastructure push? And will it catapult us to a sort of developed India? Is there a vision for that as you see it?
And that is the vision, because as the finance minister rightly said at the beginning of her budget speech, that this is the first budget for Amrit Kal. So it has got a long-term goal and long-term vision. And that is why there is a lot of emphasis on also skilling India and the huge focus on digitalization, yes, and development of skills. The focus on AI. Yeah. Yes. So the long-term sustainability, all these are good, but then the long-term efficiency, sustainability, that was a phrase that you used. Long-term efficiency, sustainability will depend. Apart from this, it will depend also on the quality of education. Actually, if you look at the quality of education, it has suffered during the last 2 years. Right,
Yeah.
last 2 years because of online education, and children, the focus on online education, will be very much limited, and therefore the competence of school children particularly, and also even at the college level, +2 level, the competence and the quality has suffered. And therefore, the long-term sustainability depends on how far we can compensate for that also. Compensate for the loss that has already been incurred. But the focus is right, and let us be optimistic that we will succeed in achieving the long-term goals. And also there is the 5G. 5G is, we are one of the few emerging economies which are going out and launching 5G on a very large scale. And that also is going to add to the technological competence.
Okay, the ministry-wise allocation, when you look at, you find a lot of bulked up investments going there into, in ministries like telecom and so on.
That's right.
Yes, and sir, is it also when you look at the borrowing program in consonance with the big infra push that we are talking about? We also know that ultimately government has to borrow through G6 and T-bills, and it's estimated that 15.4 trillion net of redemption will be required. And it is, when still it is the highest ever compared to what was last year's 11.8. So how was that the market has taken it, considering the volatility seen in the 10-year benchmarks recently, in the last 2 days I'm talking about? And and is there a crowding out effect, because it is the same market which the private capital also has to go into, especially with the baggage of Adani and other things? So does it have given the room for all?
Well, the 15.8, that is the gross. The net, I think, is
11.8.
11.8. That's the net. Net is the most important factor as far as the net impact on G6 is concerned. And this is more or less in line with market expectations. This has not gone beyond market expectations. Actually, if you look at the 10-year G6 yield, it has declined from 7.4 last
7.28 or so. Yesterday.
That is the present rate, right? But in September 2022, it went up to 7.4.
Absolutely.
From 7.4, it has come down to 7.28. Therefore, this borrowing program can easily be sustained. But you are spot on regarding that question on crowding out of private investment. Now, this crowding out and crowding in depends on the quality of expenditure. If you are spending the money on infrastructure, let us take this 10 lakh crore investment spending that has been proposed for next year, FY24. See, we must understand the last year's ambitious outlay of 7.5 lakh crore was almost achieved. The revised budget is talking about 7.3. So assuming that this 10 lakh crore 10 trillion rupees of investment expenditure is achieved, that will lead to crowding in of private investment. We have to distinguish between crowding in and crowding out, because this kind of,
at least government has put in the money, so they're more cautious.
Yes. When you spend this kind of money, particularly on transport infrastructure, that is one focus area which you rightly mentioned in your question also. And in transport infrastructure, when the assets are being created like this, a lot of private participation is involved there. A lot of private companies are involved. It is not the government that is doing everything. So with the kind of very extensive private participation in this infrastructure investment, what we are going to see is a crowding in of private investment. That is a desirable thing. But then if you are borrowing money for financing your revenue expenditure, then you have crowding out, because revenue expenditure doesn't create any assets, and there is no crowding in of private investment. There is crowding out, because government will be walking away with a major chunk of the savings available, resulting in a crowding out of private expenditure. But in the current context in India, where banks are sitting actually not very comfortable because the excess liquidity in the banking system, as you all very well know, all the banking people know that that is over, and there is now a scramble for savings, which is the reason why the savings rate, deposit rates also are going up. I heard an important news item saying, I think it was in the business channel, that one person was distributing pamphlets in a very busy marketplace, asking for deposits for a bank, right? Distributing pamphlets. Please come to our bank, deposit money. We have raised the deposit rates by 1%, 0.75%, etc. And a lot of advertisement also can be seen. So that's a reflection of the tight liquidity situation that is slowly emerging. So that is an important thing. So banks also have been forced to increase the deposit rate, but then there is sufficient savings available and a lot of money, let us hope. And that is one fallout, one positive fallout of the sluggishness in the stock market is that some money will come from too much money has been flowing into the stock markets. A part of that will come into the banking system because the real return on bank deposits is now positive. It was negative. It was negative when inflation rate was close to 7% and banks were giving less than 6% post-tax, right? But now we are having a situation where inflation rate, I think, is 5.62%, 5.72 last December, and the banks are giving much more than that. So real returns are positive, so banks might succeed in attracting more deposits. So we don't have to bother about crowding out. The public expenditure investment program will crowd in private investment.
Thank you. Thank you for the clarifying the nuanced aspect of that. And it's also now, we'll be soon starting in another 10 minutes or so, we'll be starting the Q&A. So I would request, all of the cohort of participants here, as well as people who are virtually connected, to put in those questions in the chat boxes. We'll start taking it from, say, 12:40 or 45 onwards. So please put in your questions in the chat boxes on items which the speakers have not, clarified. And if you want to still know about it. So I'm just so I'll wait for that, and I'll take the next question to again to Shantakumar sir. Sir, we also knew, though the gift city was started with a lot of fanfare a lot of years back. I think much has happened, and now we talk about a single window clearance in the budget proposal for the gift city, and we also talk about SEZ, RBI, SEBI, and GST, and all, and including an arbitration law and all to come under that single window. And it is also supposed to take up acquisition financing. Could all these measures help in scaling GIFT into a sort of major financial center of the world? When you're talking about India, to start keeping in all firing on all cylinders, you also need to facilitate these kind of mechanisms. How do you see this, especially from the banking community? Because most banks have opened branches in the gift city and so on. Your take on that, sir?
Yeah. The union budget has proposed several measures to, what I would say, to improve and enhance the business activities in Gujarat International Finance City and International Financial Services Center. Those include delegating the powers under the SEZ Act to International Financial Services Center Authority to avoid dual regulation, setting up single window IT system for registration and approval from IFSC, SEZ authorities, Goods and Service Tax, Reserve Bank of India, SEBI, and Insurance Regulatory Authority, besides permitting acquisition, financing by IFSC banking units, the foreign banks. This has been brought under a single window system. As per the budget proposal, a subsidiary of Exim Bank is also proposed to be for financing established at IFSC and IFSCA Act would be amended for statutory provision for arbitration, ancillary services, and for avoiding dual regulation under the SEZ Act and these acts.
Okay.
The measure also includes recognizing offshore derivative instruments as valid contracts. Finance Minister Nirmala Sitharaman said in the Parliament that for countries looking for digital continuity solutions, we will facilitate setting up their data enterprises in GFT IFSC, she said. So these are the few things which I could highlight.
Okay. As far as the JFT gift city is concerned, is that right? Yeah.
Yeah.
What is your take on the rejigs in the customs duty part and simplification of a lot of indirect taxes in the proposals?
So in the indirect tax regime, we have got on customs duty and on GST. GST, most of the decisions can be taken only after it has been approved by the GST Council. So in the customs duty, the indirect proposals made in the budget promote exports, encourage domestic manufacturing, enhance domestic value addition, and boost green energy and mobility.
Absolutely. A lot of talk on green energy, I mean, green related,
Yeah, that's right.
capacity creation. Yeah.
Yeah, right.
If we could throw some more light on that, sir.
Yeah, the customs duties were revised on the following list of items: imported capital goods for lithium-ion battery for manufacturing, that is for green mobility.
Okay.
Then imported mobile camera lens.
Okay.
That is deepening the value addition because camera lenses are imported, so that value addition manufacturing is a thrust for manufacturing of mobile phones in the country. Then denated ethyl alcohol for the chemical industry that has been reduced. Then primary inputs for making shrimp feed. So the marine exports, the primary input duty has been reduced. Then for seeds for manufacturing lab-grown diamonds, because then lab-grown diamonds, the minister was saying, that has the density and also regarding the clarity also, the lab-grown diamonds are at par with the natural diamonds.
Okay.
So that will reduce the cost of diamonds. So accordingly, the duty on these seeds for manufacturing lab-grown diamonds have been reduced.
Okay.
Then extending the concessional basic custom duty on copper scrap for making more availability of copper for manufacturing. Then compounding rubber to bring it at par with natural rubber to curb duty circumvention. That is, now the duty was less on compounded rubber, that is being enhanced so that it is bought at par with the natural rubber, the rates. The natural calamity contingent duty on specified cigarettes was introduced. Custom duty on imported silver door, bars and articles have been increased to align them with that of gold and platinum. And further duty on jewelry. Jewelry, the duty has been increased from precious metals including gold, silver, platinum. Because gold, it has not been increased. On gold jewelry, it has been increased.
Okay.
Extension is granted to exemption from basic custom duty on raw materials for manufacturing steel, ferrous scrap, and nickel cathode. FMS reduced the basic customs duty on seeds for manufacturing, which I already mentioned. The basic customs duty on electric kitchen chimneys has been increased. FM reduced the basic custom duty on parts of open cells of TV panels to encourage domestic manufacturing television. Custom duty exemption is being continued for import of capital goods and machinery that are used for manufacturing lithium-ion cells for batteries in electric vehicles. Exemption is also granted for excess duty on GST paid compressed biogas used in blended compressed natural gas because they want to switch over to green energy. Minor changes are carried out in the basic custom duty, cess and surcharges on certain consumable imported such as toys, bicycles, automobiles, and naphtha, etc. These are the major changes in the excess duty.
Okay. Thank you. Thank you. I'll just take up one question and then possibly so that it prompts others also to ask question. There is a question in the chat box from one Divya Moni. She asked, if I opt for new tax regime and next year I want to go back to the old tax regime, would it be permissible? The question.
According to the scheme now, once you opt for the new tax regime, you cannot go back.
You cannot
go back.
That obviously clarifies to whoever was asked. I think it was a question of virtual check. Yes. Thank you, sir. Thanks for clarifying. And others who are virtually connected can put in your question in the chat box. We'll be taking it. Meanwhile, we'll also be deliberating with the experts. So coming back to Vijay Kumar, sir. Sir, regarding the inflation, we all knew that, still a lot of works to be done. We have also been discussing on that. How was it panning out after the budget, considering the fact that already day before yesterday, 25% basis point increase by Fed has come in, and our perhaps in this fiscal, current fiscal, the last monetary policy review is coming up in a week. So how do you see inflation perched?
Well, inflation last year got globalized, as we all know. I've been monitoring inflation trends globally as well as in India for the past 40 years, and I have never come across any particular period or any year in which American inflation and European inflation has been higher than Indian inflation. So 2022 was a year in which, even though inflation in India breached the RBI 6% ceiling, the target for, set by the Monetary Policy Committee, we are a country in which inflation is relatively lower. In UK, even now it is more than 10%. I think this morning it was more than 10.65%, and that is why the Bank of England has again hiked the rate by 50 basis points yesterday. European Central Bank also has done that because their inflation also breached the double-digit level. In the US, of course, there is a disinflation process now happening. Inflation is slowly coming down, but even then it is higher than the inflation rate in India. So in India, 5.72% is under the present context of global inflation. I will not say it is tolerable. RBI should continue to try to bring it down. But then other things are happening now. As I speak to you, the Kerala budget has been presented. And one breaking news in the Kerala budget is the Kerala state government has increased the price of diesel and petrol by 2 rupees. It's a breaking news now as I'm watching the TV. So now, since the petroleum product pricing, even though the pricing is done by the central government, the taxes are not yet under the GST. So the state finance ministers have that room for maneuver, and they are using it very, very extensively. So the state government has pushed up the price, petrol and diesel both, I think by 2 rupees. Yes, 2 rupees. For both the petrol and diesel. So naturally that will lead to cost push inflation, right? Even if the RBI tightens monetary policy for containing inflation, this is a cost push element in inflation, which will contribute to inflation. So if all state governments start doing that, in spite of the best efforts of RBI in trying to contain inflation, and also the central government, the fiscal deficit reduction. Actually, while I was participating in a panel discussion on the union budget, one person was saying, he's a politician naturally, so he has his own axe to grind. He said there is no fiscal measure to contain inflation. Actually, containing fiscal deficit is the best fiscal policy for containing inflation, because fiscal deficit means the excess of your expenditure over the revenue. So the excess of expenditure over revenue means the excess demand. So the excess demand leads to inflation. So if there is some very serious initiative to contain inflation, through fiscal deficit containment, that's the best anti-inflationary measure. So I think particularly in India, the CPI inflation, I think 48% is mainly the food items, and therefore it pinches the poor people, the lower middle class people more. But then because of the bountiful harvest that we had and ample food grain distribution, and also this Pradhan Mantri and Garib Kalyan Anna Yojana, under which 5 kilograms of food grains are being distributed freely. That scheme has been continued for one more year. Because of that, the food inflation part is under control. So it is not a problem which will go out of control like in Pakistan or in Turkey, where inflation rates are breaking all records.
Thank you. So some dark houses, but still a lot of work done, you mean to say. Good. Thank you, sir. And in fact, I will just, there is a question in the chat box also related to that, where a gentleman is asking, sir, do you find any more rate hike and impact in the market? Which sectors look positive in view on gold and commodity? In fact, I would want to take it to Vijay Kumar, sir. And then there is one more question. This is for Shantakumar, sir, wherein Mr. Sanjeev Chaudhary is asking, any update under Section 80D who are eligible to rebate under Section 80D. So let me first take it to Vijay Kumar sir, then I'll come to Shantakumar sir.
Yes.
Please, please.
The question was on the rate expectations.
Yes.
Now, you are in a global environment where the leading central banks have been raising rates. And when leading central banks, the Fed particularly, and the ECB and the Bank of England, when they raise rates, well, other emerging countries, even countries without inflation, are forced to raise rates to prevent capital flight. So even if your inflation is not a problem, you have to raise rates. Otherwise, the capital flight will gather momentum and bring the currency down. Therefore, to contain the volatility in the exchange rate, yes, and that is why I expect one more rate hike by the RBI, by the Monetary Policy Committee in the coming policy meet, maybe by 25 basis points or perhaps by 35 basis points, and the RBI is likely to pause after that. And the Fed also in the latest Fed meet, the Fed is the most important. The gorilla in the room is Fed, even though ECB and the Bank of England also are important. What moves global markets, global bond markets, global currency markets, and also the global stock markets is the Fed. So the Fed, I was watching the talk, the press conference of the Fed chief, Jay Powell, because more than the statement, the Q&A throws a lot of light because there will be a lot you can gather in between the lines. So he admitted that there is a disinflationary process underway. And when he was asked a particular question on whether the Fed will pivot towards the end of this year, cutting rates, he said the Fed is not likely to pivot by the end of this year because the market is always ahead of the central bank. The market is ahead of the central bank. So the central bank is leading, not the central bank. The market is leading, the central bank is following. So the market believes that the Fed will cut rates because if the US succeeds in containing inflation and the global economic slowdown is strong enough to slip the economy into a recession, the Fed will be forced to cut the rate. So most probably the rate hike by the Fed that we had one day back is likely to be the last rate hike. If that is the situation, the Monetary Policy Committee in India also will pause after one more rate hike because the concern is not inflation now in India, but the exchange rate. Okay. And regarding your second question was on gold. Gold price is determined by the dollar index predominantly. It is not determined by other factors. And the dollar index has been coming down. Last November, September, October, November period, dollar index touched a peak. It was 114, if I remember correctly, last October, November, the peak. From 114, it has come down to below 102 now. So when the dollar index declines, which means the other currencies, the other six currencies are appreciating, right? The pound sterling, the euro, the Canadian dollar, the Swiss and the Swedish currencies, they are appreciating. That means consumers in those countries with those currencies can purchase more gold. Consequently, the demand for gold goes up and gold prices rises. This is the connect. This is the normal connect. But then during abnormal times, when you have a crisis, when gold becomes an asset of safety, a safe asset class, a safe haven, as I say, it becomes a safe haven, there can be money flowing into gold and the gold price happening. But otherwise, during the last 1 year or so, gold price has been dancing in tandem with the dollar index, and the dollar index is likely to weaken further.
Okay. Thank you for the exhaustive explanation. So before I take the Section 80D related question to Shantakumar sir, the floor is also open to questions from participants who are attending, the court of participants here. So please raise your hand who want to take the question. But before that, let immediately after Shantakumar sir, I'll take your question. Please. Yeah, no, I'll let this question be over, then I'll come back to you. Okay. So please, Shantakumar sir, go ahead with that question on section 80D, sir. And I think along with there is an allonge question I can put, wherein to whom we have clarified regarding the tax regime. It appears she's asking whether the new tax will benefit the middle class more compared to the old one, as it may put more money in the hand of the taxpayer depending upon various tax slabs. That is one question. And there is another question which is being asked. It says that had it been for the last year, the change of regime from the old to new and back to old, is it possible?
No, right from the introduction, the government has made it clear that you have to opt for the new scheme.
Oh,
And once you, now they have reversed it. Now, only difference is the new scheme is the default scheme.
Default scheme, yes.
Also, you have to give a declaration saying that whether you want to go for the old scheme or not. So people who are already in the old scheme, they have to give an option at the beginning of the financial year itself, saying that they will continue with the old scheme.
Okay.
So switching over is not possible. And as far as 80D is concerned, the government has not touched upon any of these exemptions under Chapter 6A, 80D, 80C or anything, because they want people to delink the income tax from this investment, savings, etc.
Okay.
Earlier, Income Tax Act was used as a measure for attracting investments, whether it is small saving investments or when it comes to industries, they will say that certain particular states, if you invest, you will get some this thing encouragement. There will be tax holidays and all that. Now, except for SEZs and others, you don't have such benefits available now.
Thank you. Thank you.
Right.
Yeah, please go ahead. Anything more you want to add, sir?
No, there is. I mean, what I was trying to say is that so that exemptions and concessions they are trying to totally do dealing, except for 80JJAA, there is a deduction available to the companies where the companies, if the number of people employed in the company are increased year on year, there will be a weighted deduction available to the companies under 80JJAA. And as far as the basic question of 80D is concerned, the existing slabs continue that for an individual up to 25,000 and senior citizen up to 75,000 to 50,000. So totally you can, if your dependent parents are there, totally you can take a deduction of up to 75,000 on medical 80D.
Thank you. Sir, now over to the. So you want to add something? Please. Go ahead.
Yes. Shantakumar is the expert, and I take his advice on many matters. So let me just introduce the economic logic here in this taxation thing. The economic logic is, it is the income that is being taxed, right? Now imagine a situation of two individuals, A and B. A has an income of 10 lakhs. B has, in the old regime, A has an income of 10 lakhs. B has an income of 8 lakhs, right? But A, he has bought a housing loan. Therefore, the interest exemption is there. He uses all the 80C, 80D, all the benefits. And if all the benefits are used, Shantakumar himself told me that a person with an income of 10 lakhs can escape paying any tax at all. But if the other person B with an 8 lakh income is actually relatively poor because he has got a bigger family to support and therefore he doesn't have the saving avenue, he ends up paying more tax because he doesn't have savings. Right? So that is the economic logic. Income tax should be a tax on income.
Not on the saving.
Yes.
Okay.
I was in course of my speech also comparing the two, the old scheme and the new scheme.
Yes.
And if you would remember, I had highlighted this aspect.
Okay.
Saying that if you go by the old regime up to 10 lakhs, you need not pay any tax.
That's
and
right.
Whereas, according to even Nirmala Sitharaman, if a person earning 9 lakhs has to pay 45,000 rupees tax.
Very true. Thank you, sir. Thank you for clarifying. So now I'll take a question from the cohort of participant here. You can switch on and ask. Please go ahead.
So thank you, sir. Thank you for the opportunity, sir. Sir Vijay Kumar, sir, Shantakumar, sir. Very informative session. Expert opinion on so many varied topics, sir. So I'll restrict my question on the sustenance part, sir. Right now, in terms of the sustainability factor or your green energy, we find a few mentioning of your green initiatives, things like 10,000 bio plants, your waste from water plants, And when it comes to financial sector, like in terms of sustenance, we find mention like gift city, as you are rightly saying, sir. But apart from that, sir, like I would say like there is no policy level intervention for financial sector for bankers like us, because like when you talk about climate policies of the government, we are looking at net zero by 2070, and looking at more than 50% of our energy coming from renewable sector and so on and so forth. But this needs a lot of investment, sir. And the investment in terms of money perspective, it has to come from the banking sector only. So unless we don't have any incentives to lend to green projects, it is very difficult for us to sustain also. Like right under our feet, the depositors are moving away towards your equity market, like your share markets and other things. So deposits, we are finding a step going down the drain. But at the same time, we need to support these green energy projects, because like it needs a lot of investment also. But like things like for example, if you ask me, at least a priority sector lending status to a green project, that will help to the bankers and mitigate to some extent on the liquidity front also. So now that the budget is done, sir, my question is this: like you are experts, you are dealing down with some government department officials also. But my question is, there are at least some underlying sentiments which is building up in the government's perspective as to how we can support the bankers at the larger perspective, sir? Because it has worked very well in the manufacturing sector, like things like your PLI. So that has directly impacted SME units. Unless a policy level push comes from the government to support the bankers, it will be very hard for us to also to support these projects. Thank you.
Yeah, beautiful question. I would request Antakumar Star to first respond, and then I'll bring in Dr. Vijay Kumar also. Yeah, please, go ahead.
So I'm very aware of your what you call anxiety. To add to your anxiety, I would say that there is a new scheme because everything is based on a data. I was reading an article the other day where companies like Google and other companies, they are getting information about a person. When you type the OTP is coming into the Google, they can know about your bank details, every other, how much money you have, because it will be displaying how much money has been paid, so much is the balance in the account. Same way for the borrowers also. The borrowers' details are also, as per the data analytics, they will be able to ascertain. So there is the whole banking scenario is going to change. Now Google can advise you saying that you get a better interest if you go from switch over from this investment to another. And same for the borrowers also, Google can advise them saying that this is the best way of investing in a project. And sitting in between without actually entering into the banking field, they can make some money for giving such advices also. Secondly, I was reading that Reliance is going to enter into this banking field because they have got a lot of data from the customer behavior, habits, shopping, every other detail, and they are trying to get into the banking area. Now, I was told by an expert in or a senior banker that except for the RBI putting in just spokes into their entry into the banking business, but slowly they will also come into the banking business with a lot of data itself. So forget about your deposit. Your entire banking industry is going to suffer because of this, because of the new data analytics and other information available with the customers. That is point number one. Point number two is green energy. There was about your concern that this should be taken up with the ministry. The ministry had done discussions with various industrial leaders and everybody. From this discussion started from the month of August and it went up to the month of December, early January. And I am the one of the National Executive Committee members of the Indo-American Chamber of Commerce, where we had also put up certain proposals. So bankers, you had an opportunity of putting up the proposal. Even now, the budget will come up for discussion in the parliament. There will be a threadbare discussion of the budget proposals. And based on the discussion, the finance minister can still make amendments to the proposals, add to the proposal and all that before the budget is finally approved by the parliament. So these questions can still be raised through members of the parliament in the parliament, and then it can be got answered. Okay, all right.
Thank you, sir. I want to bring in Dr. Vijay Kumar. See, we also knew that from the budget, as my colleague was taking it up. ESG is a major focus. There is a talk about viability gap funding or sovereign for green bonds. From sovereign green bonds, we are talking about sovereign green funds. Then it's so many such pronouncements and enhanced outlays we have seen for energy transition, green mobility, and all that. See, now his quest is a bit more directed. He says that unless otherwise this has been brought into the framework of climate financing, and bankable projects are going to come in from that, and it goes into the integrated framework of the banks in the due diligence part of it. How is it that you are going to see a big change? So it's also very clear that the bankers have to behave themselves, but they have a stewardship responsibility also to drive green initiatives. So especially since they are having a lot of money and are doing a financial role also. So how is that getting factored into the whole scheme of budgetary economics? Is what I guess he's trying to tell you. If I
No,
put words in.
yeah, yes, he has raised a very, very pertinent question. I appreciate his concern. That is a general concern. Well, the State Bank of India is the right institution to influence the government, being the largest bank in the country and the most powerful public sector bank. You have a lot of clout, and State Bank of India should use its clout to influence the government. I agree with you that this has to be brought into the policy framework of climate financing. Then only we can achieve the goals. Now, on many issues, the finance ministry, even though the government is inviting suggestions, recommendations, opinion, etc., before the formulation of the budget, many are completely glossed over or being ignored. So the State Bank of India, as the leading the commercial bank in the country, should utilize its clout to influence the government and make it part of the policy. Then another thing is, and another concern is, we have two companies in India, major companies in India, investing hugely in green energy, in non-conventional energy, in solar energy, and one of them is in trouble, as we all know. Yes, the green projects and all that, and banks, including State Bank of India, have lent a lot of money there. So if Adani naturally finds himself cash tight, because the experts like my friend Shantakumar will tell you that the credit ratio of many of these large projects is less than 1. And therefore a matter of concern. It is unlike many other companies like Infosys, TCS, HCL Tech, etc., which are zero debt companies and sitting on a lot of cash. For large infra projects where the debt equity ratio also is very high, cash flow can be a problem. And therefore, this crisis is something which, particularly since this company has been in the forefront of executing large infra projects in India. So that is an area of concern. I don't think a big crisis is looming. I'm not saying that. But then that is an area of concern. But then Dhirubhai Ambani doesn't need bank funding for, not Dhirubhai Ambani, Mukesh Ambani. Mukesh Ambani, they're going to invest 75,000 crores of rupees, not a small amount of money. And the funding is already in place. And they are very good in execution also. For them, the debt equity ratio is not a problem at all. Actually, they are close to zero debt levels. If you factor in their cash investments, liquid investments also. But then, therefore, they can invest hugely. The climate financing is not a problem there. But then I agree with the question of the questionnaire and agree with the view that we have to do a lot more in making this as a part of the policy framework.
Thank you. Thank you, sir. Thank you, Vijay Kumar, sir. So there is a gentleman, there is a question from here. I'll take that out.
Kishore sir, if I may add.
Yeah, please. Go ahead, Shantakumar.
See, I've been just reading that the government says that this 25 years of Amrit Kal, this green energy is a Sapta Rishi, one among the Sapta Rishis. Okay. So the government is earmarked 35,000 crores for petroleum, natural gas, and new and renewable energy has received a budgetary allocation
transition funding, they say,
10,022 crores a 45% increase. The natural green hydrogen has received 19,000 crores. So all these investment, this is the part which is put by the government. So the government expects the private sector to also take it up, and the private sector may need funds from the banks.
Correct.
For implementing all these projects. And as far as Adani is concerned, I would take an opposite side, because unless there is a person taking the opposite side, there cannot be any deliberation. So Adani's, most of the companies are not gone public. There are a lot of companies which are private where they hold more than 75% of the share equity. So if the assets are so huge there that you cannot expect them to, go bellies up that way by, because if they return the funds. And secondly, their borrowings are being brought down consistently. And if the information is correct, the overall debt equity ratio is less than 1.
But even in the listed companies, the promoter holding is 74%. Even in the listed space, the promoter holding, yes, the promoter holding is 74%, and the SEBI requirements demand that 25% has to be non-promoter holding. So the foreign institutional investment also comes under non-promoter holding. So some 16-17% is the foreign institutional investment that has come via Mauritius and Cayman Islands. So that is the reason why more than 90% of the total equity is under the control of the promoter. And that is the reason why the public float is so low that there is only demand. There has been, I'm talking about the past, not the post-crisis situation. There were only buyers in the market, no sellers, and therefore the price has skyrocketed to unreasonable levels.
Okay. Thank you, sir. Thank you for clarifying that. And I guess it explains, the entire thing. Yeah, your question.
Sir, good afternoon, sir. Vijay Kumar, sir. My question is for Vijay Kumar, sir. Sir, during the last year budget, Honorable Minister has spoken regarding privatization of 2 public sector banks and 2 insurance companies. Nothing was commented during our budget, sir. Can we infer it as kept on hold or stopped or relooked, and strategy is going to move in the next after election, sir?
Post-elections, I agree with your surmise there. It is put on hold for the time being. As I remarked at the beginning of my observations, the last year of the government is not the time period to push in a privatization. From the economic perspective, it may be desirable, but from the political perspective, it is not very desirable, because unions are very powerful, and also the public opinion in emerging markets generally are not favorable to privatization, and that's why the government has put it on hold. And if the present government comes back to power, we don't know. I'm not making a prediction regarding that. If they come to power, or if whichever government comes to power after the 2024 elections, privatization has to be a key element of economic policy.
Thank you, sir. Thank you. So, when you have any questions from this side, please. Switch on and ask.
Sir, good morning.
Introduce yourself also.
Good afternoon, sir.
Yeah.
Sir, I do have a question. In the current budget of 2023, we have seen that government had made a announcement regarding the senior citizenship deputy scheme, where the ceiling has been increased to 30 lakhs. And moreover, sir, we are seeing that government is quite frequently increasing the interest in various other instruments also. So, won't you find that this is a challenge to public sector bank, and this can lead to asset liability management risk to these banks? What is your view on that particular area, sir?
That's a question to me?
Yes, sir.
Okay.
Vijay Kumar,
Now, senior citizens, don't grudge them to that. The limit was raised from 15 lakhs to 30 lakhs. That is not going to be a big challenge for banks, because the senior citizens are a very small amount, small in number, and even senior citizens who have the ability to put in 30 lakhs in senior citizen savings scheme also will be smaller in number. Therefore, that is not going to pose a challenge to the banks. I don't think it will pose a challenge to the banks.
Okay. So there is a couple of questions in the chat box, to which I'm flagging off to Shantakumar sir. The question goes like this: is there any change in the interest amount of rupees 10,000 eligible for TDS deduction? That is one question by Anbumani. And there is another question, Sanjay Pawar, who asks, sir, please elaborate on tax applicability of encashment of leave for the retirees of government and non-government employees? If you could throw some light on these two questions for the benefit of the audience. Yeah.
No, the first question, can you please repeat?
Is there a change in the interest amount of rupees 10,000 eligible for TDS deduction?
No, there is no change on that.
There's no change on that. Okay,
Yeah.
clear. Then the next question, sir, please elaborate on tax applicability of encashment of leave for the retirees of government and non-government employees.
For the government employees, there is no change. For the non-government employees, the leave encashment at the time of retirement has been raised from 2.5 lakhs to 3 lakhs.
2.5 lakhs to 3 lakhs. Okay, that's all. Please, there is a question from the audience here. Please, go ahead.
Good afternoon, sir. This is Umakant. I am a faculty in the program. Thank you very much for Vijay Kumar sir and Sant Kumar sir. They have given a lot of insights and new angles of reading this particular budget. So one small question, sir. This new regime of the tax, the rebates what they are discontinuing is basically on the investment policies. What the people, common man investments. So is it not that hampering this investment proposal? The people are the investment habits. How that is it right thing that is how that is will be get addressed?
Very nice question. Hope you got the import of it, sir. Chantakumar.
Vijay Kumar sir can first answer, then I'll answer that.
Okay. I've already touched upon this because income tax should be taxed on income, and savings should not come into the picture. Ideally, globally, I think that is a standard, particularly in developed countries. But in India, we have been giving all this ATC benefits and all that for promoting savings because in the early years of our economic growth, saving was very, very low. And actually, economic growth depends on investment, and investment depends on savings. The government was promoting savings, and your concern is very much right. Savings will be impacted. One major development in the stock market after the announcement of the finance minister that the finance minister is going to encourage the new system, making it the default system. Immediately, insurance company stocks, HDFC, life insurance, ICICI, life insurance, all the stock prices immediately started dropping in a big way, right? The reason is in India, even now, even among educated people, they regard insurance as an investment. So that investment angle is not there, then people will not make the money. Yesterday, I was participating in a discussion, and a very renowned professor, a good friend of mine, is a great scholar, teaching in a very prestigious institute. He told me that his wife was annoyed when he told her that he's going to take a term policy, right? A pure term policy, pure life insurance. Actually, insurance is not an investment policy. Insurance is for protection. But what he told me was, my wife told me, I don't want to get your money after your death, right? When you die. So death is not the consideration. So this is the practice in India. Even I gave this example because even among educated people, this is the thinking. And therefore, it is quite possible that savings, that part, savings might be impacted. That is a genuine concern.
Thank you so much. Yeah, please go ahead, sir. Yeah.
No, I have already covered what I have to say because earlier income tax was used as an act for forcing people to invest, for starting industries in particular states or particular districts, and a lot of other things. And investing in a particular industry, there used to be weighted deduction for a particular industry. So that income tax was used as a forceful investment in particular areas. So that has been done away with. And if you look at the trend of the new people, like unlike the older generation like us, who believed in for a better future tomorrow, they feel more secure and more safe. And they know that within the span of their living in the company or in the office, 30, 40 years, they can make enough money for the rest of their life. So they have built up a habit for making money and spending it. So the government has rightly sensed it. So the government is moving in the right direction along with the youngsters.
Moving as it goes, yeah. Be a Roman when in Rome. Yes.
That's exactly.
Okay. So, I mean, so much thankful. Perhaps we can take one more question, one last question. We are running out of time. Yes, please.
Good afternoon, sir. Myself, Mayur. My question is for Vijay Kumar, sir. Sir, for last 2-3 years, we have seen that the practice of presenting a separate railway budget has been done away with. So, has this been, and the railway budget is presented along with the union budget. So, has this been beneficial or otherwise? And one more question that for last several years, we have seen that the railway fares have not been increased. So, how long is this practice? Will the railway be able to sustain?
The answer to your second question, that the railway fares have not been increased, it will be answered in the next year's budget, because because after the elections, the new government will have to take a decision. Because your concern is very much right. If railways need a lot of funding, we have very ambitious programs, particularly for the Vande Bharat trains. Yes, where huge investments are being planned. But then hiking the rates just before 1 year before the elections, because we know from experience that good economics is bad politics. But then last year's this budget, 2023 budget, I would say, has not been populist in that context. They had the option to be populist, but they did not become populist, and they have been more reform oriented. But very unpopular decisions like hiking the rates of railway fares will be taken up. That has to be taken up, because we need funding for massive infrastructure projects. And this will go. Now, in the budgets, you need not declare all those things. Actually, the details. This year, the finance minister's budget talk was very brief. Only this is required. You don't have to give all the explanations. Explanation will come later on. Therefore, it is perfectly fine. Yeah, perfectly fine to have a union budget incorporating the railway budget also.
The system of having two budgets, because that was we inherited from the British Raj, where the railways were controlled by another company by the British. And the main budget was presented here, and it was presented. Usually, we used to present the budget in the afternoon, because to fall with the Greenwich time, meridian time. And now the system was done away with, number one. Number two, as far as the price increase is concerned, earlier senior citizens used to get a rebate or discount. After the COVID, they have slowly removed it, and they are keeping quiet. They said, we'll bring it today or tomorrow, but they have not introduced it.
They should not. I believe they should not. I'm a senior citizen. Why should I be subsidized?
No, what I am trying to say is, slowly they are just, wherever they can cut the corners, they are doing it. Secondly, there is a dynamic pricing system now in the railways. If you are booking Talkal on the last minute, prices are increased. So the railways are finding ways and means of raising more money from the people. Secondly, they are giving more thrust on freight movement, not on the passenger movement. Freight movement, if you would go to a place like Mangalore, you will see loads and loads of trucks are being loaded into the carrier, and they are taking up to Delhi and Meerut and other places. So that way, railway is increasing their money through that. And the railway slowly and steadily, they are also trying to privatize. Now already certain railway lines have been privatized. So they are trying to privatize also, by which the burden of the government will be brought down subsequently.
Thank you. Thank you for the exhaustive clarification. Now, perhaps only the last question. I just want each of these experts to sort of summarize, as per your analysis, what is the three biggest hits and what is the three biggest misses in this budget? First question, first chance to say Santakumar sir.
Okay. So the three hits I would say is, one is the government minister Sitharaman said that since 2014, the government's achievements, saying that no one is left behind.
Okay.
And in the budget, you have seen that benefits were given to the salaried class, then to the employees, as I said, regarding their leave encashment, then for the underprivileged classes, like the particularly vulnerable tribals, they have found allocated some money. The money has been allocated to the PM Vishal Karma Kaushal for supporting artisans, SC/ST, and OBCs. Measures have been announced to allocate a lot of micro, small, medium finances They have been also included. Then by reducing the surcharge from 37% to 25%, they have also made a feel-good factor to the rich. And in that, the government says that 35,000 crores will be released. And this money is expected to come into the markets, by which it will give a boost to the demand. Then ease of doing business. The government, according to FM, 39,000 compliances and 3,400 provisions have been reduced and decriminalized. So that way, ease of doing business, that's a good thing. And increasing the capex for the third consecutive year by 33% to 10 lakh crores. Budget has set a strong signal that India is equipped to absorb large investments. So people from outside, it's a signal to them that they can. That are the plus points. And coming to the misses, allocation to Labor Ministry and its social security schemes saw a dip from 16,893 to 13,222. This issue of long-term employment and quality jobs have not been addressed. The second thing is the budget allocation. Ministry of Minority Affairs has been reduced by 38%. Several scholarships and skill development schemes got major fund cuts, including the Merit Cum Mean Scholarship for professional and technical courses. The scheme has been allocated for 44,000 crores against 365 crores in the last budget. In 2015, government has announced that it will double the income of the farmers. If you remember that Jetlay's budget, famous budget speech. Now, actually, if you take between 2021 and 22-23, the actual growth rate in agriculture and allied sectors has remained stagnant at 3 to 3.5%. Though agricultural exports have been increased, the corresponding or commensurate benefit has not gone into the hands of the farmers. So the budget should have protected farmers and commons. It must have taken steps to raise net income from cultivation. Food subsidy has been cut from 2.87 lakhs crores to 1.97 lakh crores. Fertilizer subsidy has been cut from 2.25 lakh crores to 1.75 lakh crores. Then Manrega amount, that is for rural unemployment, under Mahatma Gandhi scheme has been cut from 75,000 crores to 60,000 crores. So these are the misses where they could have, government could have done something.
Thank you. Thank you so much for having dissected it. Now the mic goes to Vijay Kumar, sir. As far as you see it, sir.
We are running short of time, therefore I will be very brief. The three hits are the growth target has been achieved, 7% GDP growth. India becoming the fastest growing large economy. 7% GDP growth, it's a hit. Secondly, the fiscal deficit target of 6.4%, the target has been achieved, even though it is mainly because of the denominator increasing. And thirdly, the capex, the 7.5 trillion rupees of capex the government has executed. The shortfall is only very, very minor. Normally, the shortfall in government programs, particularly when it comes to execution, used to be very high. Coming to misses, I am very unhappy about the misses in two segments, privatization and disinvestment. This has already been explained. Therefore, I'm not going into the details. These are the two misses. And one macro miss, which is an area of concern, is the current account deficit that has deteriorated this year. The current account deficit this year, this financial year, FY23, we are now running at 3.3%. And current account deficit is an area of total uncertainty because it depends upon crude prices, which depends on the temperament of people like Putin. We don't know what is going to happen. Therefore, that element is there. And as I explained in my earlier observations, the crude element is hugely important for India since we are importing 84% of our crude oil requirements, and the consumption is increasing, irrespective of whether the prices are going up or not. The consumption is increasing, and therefore India is vulnerable. Even though we are not like Sri Lanka, Pakistan, and Bangladesh, who are at the doors of the IMF now, India is vulnerable if the crude oil prices to $140 a barrel and remains there for 4 to 6 months. We are vulnerable. Therefore, current account has to be managed better.
Okay, thank you so much. And the way you have dissected it, masterly erudite analysis. Yeah, please. Go ahead, sir. Anything you want to? I think you're not audible, sir.
I want to ask a question to Vijaykumar sir for the benefit of the audience.
Yeah.
Because now our import of crude from Russia has been increasing from about 6% to 30%. So getting oil at a reduced price, will we not able to contain this current account deficit? I mean, for the benefit of all of us. I'm just
Yes,
asking.
that's the reason why the government has not increased the price of petrol and diesel for the past several months. And of course, but even then, current account deficit is your total foreign exchange revenue earnings minus your foreign exchange expenditure. Even for importing crude from Russia, of course, that maybe you are referring to that rupee trade agreement, trade arrangement. Yes, that's a very valid point, because this imports from Russia has gone up from 6% to 30%. And for our foreign minister, Mr. Jayashankar, deserves a lot of appreciation for that, because the foreign policy part has been pretty smart. And if we can execute a large, even in the olden days, we had this rupee ruble agreement where we used to import most of our defense requirements from Russia and used to export many of our consumer products, even washing powder and Nirma, to Russia under the ruble India rupee ruble account. So if we can route more of our exports through this currency mechanism, that will be a saving grace as far as the current account deficit is concerned. You are spot on there.
Thank you.
Thank you. So you exceeded our time by about 10 minutes. So wonderful, masterly erudite way of dissecting the budget. So we thank on behalf of the Institute and all the cohort of participants who could tune in. More than about 150 in the virtual as well as the captive audience who are attending the faculty development program. On behalf of all of them, I thank the experts for coming on board and then dissecting the budget for us. Thank you, sir. Thank you to Dr. V.K. Vijaykumar and thank you to Dr. Santa Kumar. And as far as the participants who are connected virtually, please leave your feedbacks in the chat box. How do you felt about the program? And in future also, as we've been telling, and our director and Mr. Subrat was also referring, it is a event that we often time take up these kind of discussions on very varied topics. This time it happened to be budget because it is topically relevant at this point in time. But it is true that we take up a lot of other themes, be it on climate financing or whatever you want. So all the participants who are tuned in can leave their observations as well as how do you felt about this particular event in the chat boxes. So on behalf of all of them, I thank you so much. Thank you. And very patient listeners for all of you also. And thank you so much.
Thank you, Dr. Vijay Kumar, and thank you, Dr. Santa Kumar.
Thank you.
Thank you, sirs. Thank you.
Thank you.
Have a
Nice
good day.
participating in this discussion. It's
Thank
a
you,
very,
sir.
it is a very pleasant experience.
Thank you.